So, who doesn't enjoy talks about regulation? Hi everybody, my name is Jan. Thanks so much for having me here. It's amazing to see a blockchain community that's been going on for 5 years. So in Slovenia, we're not there yet, but we're hoping to be there. If we learned anything from the talk previous, it's that right now we are in a complicated stage. It's not really easy anymore to put out a token, right? It's not as easy as it was 6-12 months ago, where you would put out a token, have an ICO, problem solved. Now we actually have to think ahead. So the one thing that is helpful in thinking ahead is looking at what happened earlier. So Cofoundit, yes, not so much. Yeah?
The tech doesn't work.
Sorry, does this work?
This one? Oh. So did you hear anything earlier? Do I repeat it? Okay, excellent. Take two. We are now in a very complicated stage in the growth of the crypto ecosystem and the crypto economy, right? We are now at this stage where we are big enough so that the big boys have started paying attention. And that's why we now have to be careful about stuff like regulation, what's a security, what's not a security. And we also feel that at Cofoundit. So Cofoundit is, we're not a distributed VC. So what Cofoundit is this. We looked at the way the companies get funded, startups get funded. We broke it down into different pieces of the puzzle, and we said, okay, how is each one of those pieces, up, down? We recently took stock of where we are, and we looked at the ICOs of the yesteryear. And we split this kind of evolution into phases. And the first phase was way back, 2-3 years ago, if anybody can remember that in crypto, we call it the romantic phase, right? So this was the phase when we started seeing altcoins that were not just simply Bitcoin copies. So we saw platforms like Ethereum, Lisk, or service providers like MateSafe or SIA. This phase ended with the DAO, which was an interesting experiment that showed the importance of smart contract coding even before parity, for now showed it twice. But there was one really important thing about the DAO. It was proof that the distributed economy, the emerging distributed economy, is looking for startups, is looking for ideas, and is willing to fund them. All of a sudden, you did not have to go to VCs anymore to get funding, and this was the key realization. Then we had the Wild West, right? This was like a year, a bit more ago. Typically, it was all about the non-US projects. So like Economy, where I used to work before Cofoundit, or Decent, or First Blood. And none of these projects was US, which is perhaps the reason why the US critics typically said that no, this is Wild West, stop throwing money at these kind of projects. What we saw here is that projects started with strong teams that were really strong in crypto. They had strong visions, but everything about the crowd sale mechanics was built around the core supporters, which were hardcore crypto community supporters. All the mechanisms were built around them. Bitcoin talk threads, bounty program, stuff like that, right? So that was then. None of it is present anymore. Some projects still try, but the ICO space has moved on. The end of this phase came about last winter after AdCon, when it became clear that ICOs are Ethereum's killer app, right? And the Enterprise Ethereum Alliance was founded. And then began the golden age, the age where it seemed like almost everything is getting funded, but more importantly, this was the age when the white paper became something more than just simple tech. The white paper started having a section called business model, right? So we're seeing a shift from technology, from pure protocols into businesses. And this was really important. There was also a new concept discovered called token utility, actual utility, not just, no, we're not a security utility, but actual utility. We could say that this was the era of the tokenized business models. The projects then looked at an industry, at a vertical, and looked at how tokenizing their business model could disrupt the vertical. Typically it started with finance, but soon projects emerged that targeted different verticals, like distributed cloud computing with Golem, for example. And everything was sellable. It was a crazy, crazy time when people would, so a crowd sale would happen, a token would be issued, it would be listed on a major exchange, it would pump, people will sell the token and fund the next ICO. So the hype, the circle, the funding bag just kept getting bigger, bigger, and bigger. And of course, the faster one project closed, the more FOMO for the next. Oh my God, what if I'm going to miss that one as well? We saw projects close in a couple of blocks. So what we began to see was the race towards hacking our way into ICO, into tokens, either by fake mining pools or by crazy gas price or whatever. And this led to the fact where the project supporters that cared about the project, not just about getting the tokens, started being left out. So this was the situation in May, June of this year when we had our crowd sale. And our reaction to that was that we introduced the whitelist concept. If you wanted to be part of our pre-sale, you would have to register with us, we would put you on the list, and then you would get the opportunity to purchase the tokens. And it worked. So we raised 56,000 Ether in 2 days before the actual crowd sale even began. This phase ended with really ridiculous ICOs that reached amazing levels like Bancor and Tezos. Yeah?
Can you bring the mic closer?
Even higher,
Yeah.
of course.
Can everyone hear now?
Yeah? If I drop my mic again, just somebody wave the hand and I will put it back up. Sorry. So, this ended this summer with the SEC, right? With the Eye of Sauron turning towards the token crowd sale space. So things changed yet again. What happened when the SEC put out the ruling? Most of the exchanges are in the US, the big ones, right? In order for the cycle of purchase tokens in an ICO, sell them at an exchange at a higher cost, then buy new tokens, that required big exchanges, that required token liquidity. And large exchanges stopped accepting new tokens almost overnight. So that put like a break to the entire system. It still went on for a bit, but by now I think that most of ICO supporters have most of their Bitcoin or Ether locked in tokens that are just not liquid. We're waiting for the tokens to gain in value. This led to something that we call market randomness. So if you look at project reports, right, quarterly reports, developer letters, this is what we did. If you try to connect those reports to the token price, it's random. There is no connection between the actual execution, business execution, technical execution, and the market price. Nobody knows what's going on. So the token price goes as it goes. And we also saw amazing rise in Bitcoin price in the past 6 months, which of course exacerbated the problem. Why send funds in an ICO? I don't know when they will be liquid if Bitcoin is pumping, right? So what that happened is that the pre-sale model emerged. I think that you know what it is. This is something that's happening right now. So you, before you have a crowd sale, you go to large investors and say, hey, do you want to buy $5–10 million worth of my tokens? I will give you 60–80% discount. So this is a model where the crowd sale to the public is actually used to cover the bonuses that projects give to the large investors that came in sooner. And this is something that's really goes contrary to what the ICOs were supposed to be about. It was about transparency, it was about democratization, and pre-sale are about non-transparency and non-disclosed terms, right? It's good for nobody except the big investors, and even that stopped working. So we are now at the stage where This is not working anymore. Even the projects with amazing teams, crazy advisors, crazy in a good way, right? That raise a bunch of funds in the pre-sale just can't get the traction in the crowd sale. It looks like the market, the supporters, the token crowd sale investors are holding their breath. Everybody's looking at what's going to come next. We know that what we have right now isn't working anymore. So what is going to happen? So personally, I think that applying traditional security rules to tokens is possible but useless. If we want shares, we can have shares right now. What's the point of having a tokenized share? Just the fact that instead of a share certificate, I have a token, right? The big problem with current securities is that this is the system that was deliberately designed to be closed, to prevent democratization. You have to be an accredited investor. You have to make more than 2 million per year, whatever, right? If we follow those rules that are security, we don't need tokens. And those rules are designed to keep people like us out. So that, I don't think, is the way forward. Another problem that we have is that everybody's trying to say that our token is a utility token. No, no security here, sir. It's totally utility. And what we're creating because of this is some sort of Franken token, a token that looks like utility on the outside, but if you scratch the surface, there is some value return there. There is some expectation of profit. And it's becoming perhaps ever more clearer that this is not the way forward. You cannot try to abide by the old rules who are trying to know this is actually new. I don't think it works. I think that this is also the reason why we're seeing less and less interest in token crowd sales, right? So we at Cofoundit, and me personally, believe that tokens should be regarded as a new asset class that combines some elements from previous securities, but also a lot of new elements that must be taken into account. We cannot just copy 1930s US regulation wholesale and say this applies to the tokens as well, which is why Cofoundit is actively working with regulators. So in Slovenia, for the past 6 months, we're working with Deputy Prime Minister, National Bank of Slovenia, Ministry of Finance, the Tax Authority, Anti-Money Laundering Commission, and the local version of the SEC to develop a vetted, regulated process by which a company can raise funds in an ICO. This now exists, and we successfully crowdfunded the first such project last week. It was called Data Fund, and it's actually addressing the GDPR problem that you addressed earlier. So this now exists in European Union, in Slovenia. We're now also working with European regulators to try and see if this model could be applicable to the EU as a whole. Okay, so it might look like ICOs are in a dark age right now. The previous models have stopped working, and we're already seeing articles saying, yeah, ICOs are dead. But here is the problem. The ICOs, yes, you also got the funds, but it was never just about the money, right? Democratization was not just about funding. And startup process is more than just funding. There is evaluation, there is selection, strategy coaching, operational assistance, legal, extremely important. Funding, yes, funding, and incorporation, to name just a few. So to focus just on funding and say, okay, right now we can't really solve funding, therefore the whole process doesn't work is, in my view, it's speaking too soon. So this is what Cofoundit is focused on right now. We are focused on evaluation, selection, legal, and incorporation, where we are actually crowdsourcing the evaluation and the selection part. So we have launched a community evaluation program where our users can apply to become evaluators. We have prepared a process to evaluate the teams, the projects, and the good evaluations are actually paid for, right? We will be selecting up to 50 evaluators, and we're paying $100 in Cofoundit tokens for each good evaluation. So we think that this is, while the funding part is getting worked out, we are working on the others, and community evaluation is one of those. This is just an example of the criteria we share with them. I won't go into detail right now, but if anybody is specifically interested in something, you can either ask me now or ask me later, and I'm happy to discuss all of this. And a quick example of selection, by the way, Block is one of our teams. This is the name I wanted to propose for the blockchain microphone cube, but unfortunately it's taken. So this is an example of the page of Cofoundit where our projects are listed, and Futurist is one of them. And here is how we are trying to crowdsource selection, right? So this is a very light touch way by which our thousands of users can give us feedback about, in their opinion, what works with projects and what doesn't work. This is not an in-depth evaluation. We are not paying for this, but this is like an enhanced like/dislike button that we're actively using not just to help us select and filter the projects, but also to use the community to help us find the missing parts of the project. Is it the business plan? Is it the role of the blockchain? Whatever. So this is an additional step in democratizing a selection of startup funding. So in the future, this could evolve to become a general purpose evaluation, right? Not just for startups that want to do an ICO, corporates that are thinking about a spin-off, corporates that are thinking about packaging their service as part of a blockchain, institutionals, we're already working with some, governments, local governments, right? This is a crucial part of any new service incubation process, and this is what we have. We are also working on helping remote experts add value. So right now for Cofoundit, projects that come with us, that we work with them, we connect them to our network of experts from different areas, sales, marketing, PR, legal, whatever. And right now this is our network. We have a couple of dozen experts, but we also want to democratize this so that you'll be able, let's say that you're an expert in legal, securities, funding. You'll be able to log into our platform and start working with the teams. You will build your reputation, your track record, you will be able to demand a higher price. So in terms of experts, what we want to create is something like Upwork, but not for crap jobs, but for great jobs, right? For the best jobs in the world, working with startups that might very well change the world. And of course, as everything, Cofoundit is really trying hard to evolve with the crypto landscape, or sometimes even try and help it evolve in the direction that it is. Because if there is one thing that everybody learns very soon after getting in crypto is that what was true yesterday is most probably not true today and is almost definitely going to be completely wrong tomorrow. So we try to stay ahead of the times, as I know everybody here is. Okay, any questions? We can throw you the blocky. Okay, thanks so much.